I'm Nick Harris. I'm the tech and telco analyst here at Morgans Financial. And today I'm going to spend a little bit of time talking about our key picks ahead of this August reporting season. So I'll do that, but before I do that specifically, I wanted to talk a little bit on the tech sector in general. I'm sure many of you are aware the noise around AI. So there are a lot of investors, understandably, a bit concerned that maybe this is all hype. So I think it's important just to start, when we look at the tech sector, to get a bit of a reference, just to look at some of the AI data points out there to get a feel for this. So I'll give you three kind of key points just to help you feel a little bit more comfortable with where we sit. So the first point is really valuations. So if you look at tech valuations in the US in particular, outside of the Magnificent Seven, they're all actually fairly reasonable valuations. They're certainly not outrageously expensive. They're a little on the expensive side. We do need to see some earnings growth coming through to justify the valuations, but they're definitely not outrageously expensive. Secondly, if we look at the Magnificent Seven themselves, obviously you need to look at them on a case-by-case basis, but certainly not all those valuations are stretched either. If we look at the likes of Meta, Alphabet, and to a lesser extent Microsoft, yes, their share prices have risen dramatically, but it's important to note that their earnings have also risen dramatically. So those share price accelerations are largely underpinned by improving fundamentals, growing earnings. And then thirdly, if we actually listen to the CEOs of those companies, the likes of Microsoft, Salesforce, Meta, they are all saying AI is being rapidly commercialized. So they are rapidly using this inside their own organizations in order to improve their cost bases, but also with their customers. So Microsoft in particular has noted doubling of customer adoption of Copilot month on month, and a number of other very significant growth factors proving that this is real and in the real world. And equally importantly, all of those names have substantially increased their capex or their capital bets on AI. So these are economically rational companies with fantastic returns run by economically rational people. And clearly, if they're going to continue to invest more money, they do expect substantial returns on that capital. So ultimately, all the noise around AI is coming back to being anchored with fundamentals that are improving to support that. Okay, so with all that in mind, we're going to talk about our key picks in the tech sector. So the two key picks from me is number one, NextDC, a leading data center company, and number two, Megaport. So we have an ad on NextDC, it's our key pick. Megaport we have a hold on. We really like this company long term, but there's just a few things that make us think there's going to be some significant volatility in that share price over the next month. So if I look at NextDC specifically, as I said, it's our key pick. It reports in late August. If you're not familiar with NextDC, it is the leading data center provider in Australia. So it's leveraged to all things digital, so digital economy, cloud computing, and AI. So it's been around for nearly 15 years and grown phenomenally over that period. And they have a massive build pipeline ahead of them, so building more and more data centers both in Australia and overseas. From an investor perspective, the key thing for me is that despite having a big runway for growth, they've only really sold 15% of their planned footprint. So we published some research a little while ago saying if they can build and sell and fund the planned footprint, this could easily be $40 plus stock, so substantially higher from where we sit today. Now in the short term, while we're comfortable with this stock, we know that they've contracted a substantial amount of capacity. So data centers is digital infrastructure. It takes many years to ramp up, to build, and then for the customers to install their equipment. Point being, the contracted EBITDA for NextDC is double the EBITDA we expect them to deliver this year. So $200 million of EBITDA this year, but they've signed another $200 million of EBITDA that will ramp up over time. So some very strong growth based on contracts in place, ramping up. And then secondly, we do expect material contract wins in the month of August. The next stock is Megaport. This is a great company and it has substantial upside upon successful delivery. However, at the moment we do rate it a hold. The key thing is we think this share price could once again move around up to 20% on the day of the result. We've seen this with a number of their quarterlies. It's a high growth, sort of high beta stock that has high volatility, so hard to pick heading into it exactly which way it will go. But we do think when they bring their results out on the 22nd of August, there is going to be volatility. Ultimately, it comes down to sales. So we feel that sales need to accelerate, which is the key project of the management team. But those sales need to accelerate in the June quarter just gone, or at least have some positive signs into the month of August. that there's a reasonable acceleration coming, because we need sales to accelerate to hit market's expectations for FY25. So my concern is if sales are not accelerating, and you combine that with the possibility that management may not provide guidance until later in the year towards their AGM, there's a risk that expectations are too high and they come down for FY25 post the results. And if that happens, we think that could present a buying opportunity, because we really like this company long term and we think they will succeed. We're just looking for an attractive entry price into that stock. And we think the one black swan event you could see for Megaport is the potential for a price rise towards the end of this calendar year. So we're not sure about how that pans out, but if they do decide to put through a price rise, that could actually underpin the numbers and make everyone comfortable with expectations for FY25.